Welcome to yet another edition of the BCB video blogs. My name is Dipti and I manage the tech sector at the BCB.
Hello, I'm Vinita and I lead on the financial and professional services sector. Today we intend to give you an overview of the FinTech sector here in the Middle East. It's very simply put short for financial technology. It refers to the innovative use of technology in the design and delivery of financial services and products. It covers all aspects of financial services, which include lending, advice, equity financing, investment management, banking, and payments. So, what it does is it enables individuals and business owners to make transfers and payments, invest their money, manage insurance, take out credit, apply for business loans, essentially without standing in bank queues or filling out multiple forms. In short, the ultimate goal of FinTech is to simplify personal banking for consumers on the one hand and to make it easier for other industries to collaborate with financial institutions. It's probably safe to say that traditional banking as we know it is nearing its end. By embracing technology and innovation, financial startups, often run from small offices with just a handful of staff, have been able to create simple, cheaper ways for people across the globe to complete just about every type of financial transaction known to man. It absolutely has. However, what's interesting to note is innovation in finance picked up later than it did in media, retail, or communication. However, since 2010, thousands of fintech startups have raised over 63 billion US dollars around the globe. Between 2010 and 2014, the rise of fintech investments was mainly driven by three hubs across the world: Silicon Valley, New York City, and London. However, US still accounted for over 50% of all fintech investments till 2015. And what's interesting to note is that Asia's share had tripled from 6% in 2010 to 19% in 2015. Now, if we are to categorize fintech companies, there are the developed ecosystems that have reached absolute saturation. Fewer but significantly larger deals are centered around high value companies and unicorns, hence, year on year growth for investments is slowing down. Today, only the first movers or the pioneers have reached the stage, like the US and parts of Europe, with their globally leading fintech hubs. The second category comprises of high growth fintech startups that have captured significant customer bases already. So they're fueling three-digit annual growth, investment growth rates. Now, South America, China, and Australia are some of the geographies that have witnessed such tremendous growth in the last decade. And the final category belongs to the vast majority of fintech startups that are still in the idea and early stage. Now, entrepreneurs in this category are still struggling with funding with very little support around regulations, customer acquisition, and partnerships. This is the category under which Africa, Middle East, India, and Southeast Asia would fall into.
Definitely, a lot of stuff happening with fintech startups in the MENA region. When I say MENA, I refer to the GCC countries, Levant, and North Africa, and essentially we are talking about fintech startups across 12 countries. There has been considerable growth over the last few years. The number of startups in this ecosystem was 46 in 2013, but increased to 105 by the end of 2015. There are about 250 startups that are expected by 2020. While the number of startups are equally distributed between these three regions, almost 3 in 4 fintech startups are based out of 4 countries. As expected, the UAE takes the lead, followed by Egypt, Jordan, and Lebanon. 2010 marked the beginning of an accelerating fintech creation, and half of all MENA-based fintech startups were launched after 2012. 4 out of 12 countries host 73% of all MENA fintech startups. These 4 countries represent MENA's potential fintech hubs. The concentration in these hubs reflect the fact that these are the region's most advanced startup ecosystems, which grew mainly due to government support, the involvement of the private sector, good education levels, and political stability. While the majority of the region's startups are still in their early stage, the industry is poised to witness its second cohort of scale ups before the end of the decade. Rise of fintech in the region is driven by four opportunities. One is less than 1 in 5 adults hold a bank account. With internet penetration increasing and smartphone adoption almost tripling in the non GCC market, a massive increase in electronic payment solutions can be expected. The second opportunity is that 1 in 3 bank customers want to switch their bank. And these are typically millennials who are looking for a digital banking experience. Third opportunity is that SME lending stands at 50% of the global average. Peer-to-peer lending platforms promise to leverage algorithms and big data to unlock a new wave of raising money for small businesses. And the last opportunity is that the volume of e-commerce is set to quadruple in 5 years.
Thank you for watching this video. If you have any questions, please contact us.